Good morning, afternoon, or evening, ladies and gentlemen, depending on where you're joining us from across the world. Thank you for joining Payments, Cards and Mobile webinar in association with Freemarket and Atlantic Partners Asia. My name is Alex Rolfe. I'm the Managing Director of Payments, Cards and Mobile, and I'll be hosting the webinar today. From myself and all the panelists, hope you're doing very well. A couple of housekeeping before we start it. This is a live event, and we'll have a live Q&A at the end. However, please do feel free to send your questions in as we're going along. If the question relates to a specific topic or speaker, please just note that down in the question so we can quickly reference back to that whilst answering the question. Finally, all assets regarding this event will be made available at the end of the show, meaning that you can share with your colleagues or review the information again at your leisure. You will see in the handout section in the white box to your right that there's some supporting information with regards to the webinar already, and you can download that straight away. So let's get straight into it. The world of cross-border e-commerce is poised for significant growth, and the latest data from the FIS Worldpay Global Payments Report indicates it's set to reach 8.5 trillion by 2026. This translates to an impressive annual growth rate of nearly 10% over the next 3 years, with double that figure in emerging regions like Latin America, the Middle East and Africa, which basically equates to great opportunities on offer for corporates to keep growing. But despite this promising data, cross-border payments remain a challenge for SMEs due to banking sector turmoil and rising interest rates. Fewer providers are willing to take risks, leaving SMEs pondering their options and seeking ways to expand into new markets and to grow. So how can SMEs look to navigate and thrive in the current climate for cross-border payments? And that's what this webinar is about, and that's what we're going to be discussing. Overcoming the challenges of a reduced pool of payment service providers, how fintechs can innovate to streamline and reduce the cost of cross-border payments, and how PSPs can look to survive and thrive in an environment of high interest rates, growing e-commerce, and changing payments landscape. Luckily, it's not me telling you all this stuff. Here to walk you through these topics are two experts in their field and the subject matter. I'd like to introduce Ronnie D'Arienzo, Chief Commercial Officer at Freemarket, and Jeremy Brown, Chief Operating Officer, Atlantic Partners Asia. Now, we've got quite a lot of ground to cover off through the webinar today, and so to make that as easy as we can, we've split it into 4 distinct sections: understanding the landscape, challenges for SMEs, exploring options for SMEs, and industry insights and solutions. And we're just going to move straight into section 1, understanding the landscape. Jeremy, I'm going to start with you, please. We've heard just very briefly there about some of this latest data from the FIS Worldpay report. What does it tell you about the current and future state of cross-border e-commerce?
Yeah, and thank you again for the opportunity to join this conversation. Well, what a time to be an SME making payments. There's never been so many options. There's never been so many different ways and mechanisms to send and receive payments. And with that broadened landscape and with the broadened payment landscape, this report really does highlight a number of advancements that we're seeing both globally and regionally. So the first of which that really comes out of this report is that account-to-account payments are really starting to take off. They're referred in different ways, depending on which part of the world you're in, but ultimately they're driven by real-time payment rails. And globally, this volume in the last 12 months has surpassed more than $500 billion, I should say, and it's growing at roughly 13% year on year. So account-to-account payment capabilities are becoming more and more relevant to SMEs that are looking to make cross-border payments. Credit cards is something that SMEs are very familiar with, and this report highlights the use of credit cards for business to business, and SMEs are using those. I know even from my previous experience that cross-border payments on card is, once again, a significant source of value to SMEs that are driven by loyalty drivers and working capital, results. So ultimately, credit cards come through very strongly in this report. Digital wallets are something that we're all seeing, both at a consumer level and at a corporate level. And an example of this is, the dominance that we're seeing with Alipay in Asia and China. We're seeing Apple Pay. We're seeing PayPal was probably one of the earlier digital wallet capabilities to come out. And that is now really driving a lot of growth in the payment landscape, and SMEs are adopting and adapting to that quite readily. In fact, 49% of all e-com payments are now going through a digital wallet of one kind or another. And so what we're also starting to see here, Alex, is the evolution that takes place when something's really taking off on the consumer side. It will begin to take off on the business to business side, especially starting with micro and SME sized businesses. The final piece that really sort of sticks out to me in this report is the evolution story underway with crypto. And crypto over the last 12, 18 months, 24 months has had a really difficult time. And there's many stories as to why that is. But what we're seeing is a move towards stable coins converted into fiat currencies. And this is once again being really driven by personal preference. And we're now starting to see that start to leak and eke into the payments landscape for small businesses, particularly looking at ways that they can use that capability and move stable coins into fiat currencies. And I think this report certainly highlights those trends that we're seeing across the industry.
Great intro. Thanks, Jeremy. Ronnie, anything I know that you...
Yeah. I mean, look, I think that's from Jeremy, that's a great summary there in terms of what that report's telling us. It is quite consumer focused, but with obviously some significant B2B relevance in that. I think, Jeremy just touched on the point there in terms of digital wallets. And, you look at those and there are hundreds of digital wallets around the world. The obvious ones that were mentioned there, Alipay, WeChat Pay as well. And obviously, Google Pay, Apple Pay, etc. And a lot of them are actually quite regional or even country specific as well. And I think what we're starting to see now is some of the SMEs, some of the fintechs actually aggregating a lot of those onto their platforms to allow businesses to be able to reach consumers in countries where they weren't necessarily able to do that. And if you look at cards and the growth that this report tells us is still happening, absolutely it is. But actually the traditional cards share of that overall business is diminishing as well, and it has been for many years. So rather than being called alternative payments, they are local payments, and in some markets those local payments are bigger than in a card. So Alipay, WeChat, China, Asia, etc. But even here in Europe, you look at the Dutch market, that market has a greater use of Ideal as a payment method than it does Visa and MasterCard. So I think it's, that it's a very, very complex world that fintechs are looking to try and solution and allow people to reach consumers, not just within their own region, but globally.
Yeah, I'd agree with that as well. And just you mentioned those different geographical regions. So just going to stick with that. And how does the growth in those emerging regions differ from more established markets? And therefore, what opportunities does it present for corporates? Jeremy, perhaps you want to take it on as well.
Yeah, sure. So, if we take a step back, right now I'm in Hong Kong. Most of our team is based here in Asia, Singapore, Hong Kong. If we were to have a look, for example, at the APAC region, what this tells us is that emerging economies within the Asia Pacific region are actually leading the way over more established economies when it comes to e-commerce growth. So if we look at some of those trajectories and trends, what we're seeing is, the Philippines, for example, on e-commerce growth, and obviously that's driving a lot of the payment activity, growing at 18% year on year. Indonesia at 17%, India at 16%, Malaysia at 16%. So once again, heavily driven by the consumer side, as Ronnie pointed out. Some of the data does point more towards the consumer side rather than B2B. But as I shared previously, what we see as a a theme starts to take place on the consumer side, more or less moves pretty quickly instead to small and medium-sized enterprises. So in Asia, the emerging markets really leading the way. If we take a step back and think about real-time payments, which is this evolution of account-to-account payment capabilities, that's not only being led by Asia Pacific itself. In other words, this region is the leader of that capability. But within this region, once again, it's the emerging market. So, India in this space is about 45% of total e-com value is actually coming through that account-to-account payment capability. 45%. In Thailand, it's 24%. Philippines, it's 18%. So once again, that's growing year on year. What it tells us is that in emerging economies that have more or less missed some of the technology advancements that have come through the traditional banks, it's almost like we've skipped the generation and gone straight to fintech and straight to advanced payment capabilities. And really, this is where we're seeing a thriving economy when it comes to the fintech play, when it comes to new payment capabilities, addressing a lot of the friction points that exist with legacy banks. And there's no better place to see where that friction exists than an emerging economy.
Ronnie, anything you want to add to that piece?
Yeah, no, I would completely agree with what Jeremy's saying there. That's very obvious. I think there's cultural challenges in terms of advancement that's holding back maybe some of the Western regions as well. But yeah, I think Jeremy's spot on there in terms of the fact that skipped a generation, really. And that's why this, new technology, whilst we're sort of stuck with the old rails that we are embedded with, the Asian markets is moving on faster.
Okay, thank you. So let's move into some of these challenges, right? Because despite the sort of rosy outlook, we know that they exist. And, even considering that growth that we've discussed already, why, and Ronnie, I'll pass this on to you to kick off, but why do cross-border payments remain a challenge for SMEs? And perhaps within the context, especially surrounding the turmoil in the banking sector of late and this, rising interest rate phenomenon we've had lately.
Yeah, sure. Well, look, I think before I start talking now as well, and maybe for the next 45 minutes that we've got, I just wanted to caveat then references to correspondent banks, big banks, is not in a detrimental way. So some of the stuff that I might talk about in terms of those particular banks, please, understand that my feeling in terms of those banks, they're operating. It makes good sense in terms of how they operate. There's economies of scales that they have to operate within. So if anything, if there's anything that, to take from this, closer collaboration with the fintechs and MBFIs would be the overarching recommendation in there. So it's nothing detrimental against the banks. If I were them, I'd be doing exactly the same thing that they're doing at the moment, but maybe with some nuances around there. And I think it's worth just maybe picking up some facts about the SME or the micro business and SME market. So they represent globally 90% of all of the firms. That's roughly around about 70% of global employment from SMEs, and another 70% contribution towards the global GDP. So it's huge, and that equates to an annual opportunity for the banking community, the global banking community, of 66 trillion, and that's massive. In terms of that as an opportunity. So it does beg the question, why don't the big banks want to or are able maybe to service them? And I think in some cases this is because maybe an outdated culture that, Jeremy just alluded to there as well, in terms of maybe outdated process, but for sure outdated technology means that, some of these banks are reluctant to focus on SMEs. And that's an issue, right, for the SMEs, because that same correspondent bank network still control around 70 to 90% of the market in most of the developed economies. So that's an issue. And if you add to that, whilst now we've got relatively high interest rates, we have had for many, many years globally some pretty low interest rates, which has meant that, along with difficult consumer, corporate and investment banking conditions, it has been a tricky macroeconomic environment. So those core areas for the banks that they were operating in have been squeezed. So again, in that respect, you might wonder why that SME sector, given how large it is, isn't worth revisiting for those banks. So look, I think despite the demand for the SME, the opportunity still remains elusive for those banks. And we'll talk a little bit about, where fintechs and NBFIs, non-bank financial institutes, are able to step into that. But I think it's worth just talking very quickly about what are those key challenges that the banks have, and there's a few of them. There's quite multiple. So first and foremost, SMEs, they just demand a higher intensity of the bank's attention. There's just simply many, many more of them. And along with being many more of them, they're often quite complex, and they cover a very broad range of sectors. So they often don't fit particularly neatly into the bank's organization structure. So they might be into the retail sector of that structure, or they might be moved to the corporate sector, or even if you have a look at maybe the more micro end of the SMEs, they may be treated more like a consumer. So they don't naturally have a home in the banks. And then, of course, by nature of the fact that a lot of these SMEs are relatively early stage, so startup by nature, they have very rapidly evolving needs in there. Individually, they're clearly going to have a relatively low return on investment to a corporate, so less appetizing for a bank, and they're still going to have a similar cost of acquisition. They're still going to have to go through the KYB, KYC, AML. It's still a costly process for a bank to be able to onboard an SME, and therefore, there's a very different lifetime value for that particular client to a corporate. So cost of acquisition, very key for the banks. The SMEs are also seen as higher risk, not just because of the vertical, but that does play a part, of course, but also due to the lack of maybe the equity. They don't have the sums behind them. They may not necessarily have the robustness maybe of a big corporate in terms of the equity. They have a shorter tenure that will heighten the risk that bank may see in that particular SME. And of course, maybe relatively early stage, they won't necessarily have all of the formal business qualifications, so licenses, etc. They'll be licensed, but maybe not necessarily in the regions that the bank might be comfortable with. So, look, I think in answer to that, that particular question, Alex, yes, multiple challenges for the SMEs in order for them to be able to secure cross-border payment solutions.
Brilliant. Thanks, Ronnie. And I appreciate those insights there. From Jeremy's side, I know that you guys have done lots of research on the SME challenge. Thinking about what Ronnie said there, do you obviously see the similarities, or have you got some other findings that might come out from your research?
Yeah, it's a good question, Alex. And we have done some research in just recent times, actually looking at the UK market alongside Hong Kong and Singapore, and trying to understand exactly what some of those key drivers are for SMEs in those markets. And you're right, Ronnie mentioned that they take a much greater proportion of time on the banks from a banking perspective, and so they require a lot more relationship management. There's more of the SMEs in proportion to multinational customers, for example, and so you've got a larger proportion of corporate clients being served by essentially less people, resulting in unmet expectations in some cases. And just to maybe give you a little bit of a flavour, there is still a hunger for relationship management someone that can actually manage the client experience and manage the client expectations. Directly at 75% in the UK of decision makers, they are happy to pay more in their payments transaction to actually have the benefit of someone managing their account. In Singapore, that number's 63%, and Hong Kong, still more than half. So, from a banking perspective, the SME portfolio and their expectations management-wise, in some cases not being met. In other cases, those unmet opportunities are essentially why we see so much movement towards fintechs, so much movement towards new payment providers, because essentially in this space, they are really looking for more. And our research can show that as well.
Okay, so we've got a potentially massive market, and we've got some challenges that need to be met. Let's move swiftly into the part where we actually have some options, right? There must be some options to
stuff.
Challenges, exactly. And Ronnie, I mean, in light of these challenges that we've just discussed, what options do SMEs have for overcoming some of the hurdles that they've got, or meeting these global payment needs that they definitely have?
Well, I think, in short, plenty. There's plenty of opportunity there. So, the first thing we ought to talk about is open banking. The key really is the adoption of that. That's critical for SMEs. Banks and fintechs, they simply today, obviously, simply have to rely on each other in order to do business. We've already talked about the fact that correspondent banks control between 70 and 90% of the global banking network. So there is a huge reliance in order to ensure that cross-border activity is meeting those payment needs for the SMEs. So we have to rely on those banks. So, given that obtaining and retaining a banking service directly with a big bank is difficult, the SME really should be looking at the fintechs and the NBFIs to help. So, talk about obtaining. It will take with a big bank, some time to be able to onboard them. As a small business, they may be less important, if I'm going to be honest, to that bank in terms of getting onboarded. So being able to get, say, banking services from a correspondence big bank is going to be difficult. But importantly as well here is retaining it. And often we see volatility, whether it's because of regulation or because it's of appetite, or simply just because of the focus of those large banks. That appetite or that hunger or desire or focus may change, and therefore, losing those banking services is a real headache for them. But, all's not lost. If you look at the very recent McKinsey report, the research that they did, that showed that in that fintech industry, that the fintech industry is expected to grow 3 times faster than that of traditional banking. So it's a rapidly growing, over the next 5 years, rapidly growing. And then if you have a look at some other reports, recent report from Statista showed that in the last 5 years alone, there were 26,000 fintech startups launched. So it's a huge number, and it's not just in a particular area. And very interestingly, if you look at, listen to Jeremy's input in there as well, that APAC, yes, that's key. And you look at 5,000 in that particular region that have launched in that last 5-year period since 2018. But the Americas, so that's the North and South America, nearly 12,000 fintechs launched in that same period of time, and nearly 10,000 in Europe, Middle East, and Africa. So there's plenty to choose from in there in terms of an SME looking to partner with a fintech or an NBFI. I think the other thing important, which is a real positive as well, is that increasingly the fintechs and NBFIs are becoming multifunctional, or as the phrase that we now have in the industry, payment orchestration platforms, or POPs. So, depending on their target audience, they've got an ability to integrate and handle, a number of different providers, so PSPs, acquirers, banks, gateways, all of that on a single unified layer. So whereas before maybe an SME might have to search niche providers in fintech and NBFI, now more commonly through one contract and one API integration, it's giving them access to multiple services and multiple options. So, that's a really key consideration, I think, and we'd maybe touch on it later, but that's a really key consideration for SMEs to overcome those hurdles, is to start looking at fintechs, NBFIs, and really thinking about where they best meet their needs.
Sure. I mean, you've mentioned collaboration and you've mentioned partnerships a lot in there, and I think that's probably where I'd like to stick with for the moment, because I guess most people that will be listening in and watching this in replay will want to know, partnerships, collaborations. Yes, I understand that, and I understand how they will go a long way to addressing these cross-border payment needs that I have, but how do I go about establishing these kind of relationships? Is there any kind of insight that you have for them in that area?
Yeah, for sure, Alex. Look, I think you need to take your time. I think, finding a fintech that understands your space is really critical. Trying to add anyone that's available is recipe for disaster. They really need to understand your space. So spending some time to really think about who they are, it should be straightforward, but finding the right partner is really key. So I think there's a number of questions that, in terms of doing that, the SME should be asking. So first and foremost is, what does their banking partner network look like? So there's no point in adding a fintech that has a banking network that's supporting their SMEs, but it's outside of your vertical, or that they don't have an appetite for your particular vertical or particular jurisdiction or particular currencies that your requirements or rails, etc. So getting an understanding of that fintech, that NBFI, in terms of the relevance around the banking partner, what that network looks like for them. So is it relevant, and is it complementary to their needs? So we speak to a lot of our customers as well, and they talk about when they come to Freemarket, they're looking to be able to complement their already existing portfolio. So there's no point in adding Freemarket if we're simply just replicating, or maybe there is a little bit, but there's less importance in terms of adding Freemarket if we're just simply adding something on top of what they've already got. So make sure it's complementary in terms of looking under the hood there. I think another key area as well is understanding your partner, understanding your fintech partner in there, to make sure that they have knowledge about your business as well. So do they have subject matter expertise? And that's not just within sales, that's across the whole business. So does the banking network team in your fintech understand your vertical, your requirements, your jurisdictions, your licensing obligations, etc.? Really importantly, does the risk and compliance team understand that as well? Because there needs to be harmony across those particular teams there. And of course, client support as well, because you'll be talking to them, on a regular basis as well. So understanding the vertical, understanding the trends in your vertical, understanding your product needs as an SME, that's really important. That, the fintech needs to be able to understand what your product needs are, because basically that's what's going to be feeding should be feeding the product roadmap, understanding regulation and understanding geographic differences as well. And maybe just coming back onto that in terms of, the risk and compliance in there, that's really key as well. So understanding what their risk controls are like. Clearly, they need to be robust. They need to be adherent to legislation, etc. They need to be thorough, but they also need to be relevant and balanced as well. So trying to get under the hood there and getting an insight in terms of what do the risk controls look like, what are the requirements, etc. Making sure they're thorough, making sure that they, meet the requirements, but making sure they're relevant as well. I hesitated earlier as well, and I just talked about, whether complementary is important or not. And the hesitation was because there's a word that we often use here at Freemarket is about building resilience. And again, that's key. We talked about this, this ever-changing market, certainly from a banking perspective, around whether a bank's risk appetite changes from time to time, whether their focus changes from time to time, whether they are focusing on different verticals, etc. So if that happens, and the fintech really only has, let's call it a single point of failure in there, as in they've got one partner that can service the SME, but if they lost that partner or that partner changed their mind, then you're back to square one in terms of trying to find a partner or a supplier to be able to support your business. So resilience is really key, and making sure that that fintech doesn't just have a single provider, but they have multiple providers, because given that the market will change very quickly, if that does happen, you want to have that peace of mind that your partner is able to then switch your flow, your requirements very quickly to another partner they've got in their particular portfolio. So that's probably one of the most essential ones in there, because that covers peace of mind, continuity of service, etc. I think, another one as well is, I touched upon it there when we talked about product needs, is what does their product roadmap look like? So what's coming next? What's in the next 12 months? What are they working on? And does that meet your needs? And will it help the SME grow as well? So that's really key in trying to get an understanding in terms of what's coming. Well, maybe let me touch on a little bit later as well, because I think that's important if we come back to the product roadmap. But look, other things as well, speed of onboarding, how quickly can you get on board? And that's not just the SME, but the SME may have, we look at Atlantic Partners as well. They'll want to onboard their underlying clients as well. So how quickly can we do that? And what's the speed and user experience of being able to do that? Using different rails and having different rails, what does that fintech have? And, are they able to create same-day settlements, real-time payments? Speed of settlement is really important. Touching on the user experience bit as well. So the platform, what does the portal look like? What's the user experience in there? What's the ease of use in terms of being able to use that platform? Is it easy? Does it make it efficient for you? Or are you having to keep coming in and out of that platform and it's taking too long for you to be able to execute trades, whatever it might be? And I think, finally, as I come back onto that point that I talked about, that support structure, that's really key as well. Maybe slightly difficult for an SME to be able to identify, but you build a name for yourself in the market, so you'll be able to find those that do that. But that support structure, what does that look like? How responsive are they to you? Do they come back to you very quickly? Do they listen to your needs? Are they spending time setting up reviews with you to be able to understand where you're going? And can they act fast? Are they agile? So a lot there, and a lot to think about. So hopefully that's a little bit of a list of what are the key things to think about in terms of selecting the right partner.
Perfect. Thanks, Ronnie. I think we're gonna just segue into specifically technology, and I'd like to draw Jeremy back in at this point. I've got this slide that we want to show here, and as I said, we want to talk about. So we've got this proliferation of partners, and Ronnie's given us, as he says, this kind of list of how you go about selecting them and how you might make them your partner. But we want to talk here just a little bit about how you can leverage the technology to enhance that global payments capability, and what are some of those key considerations when looking at or adopting new payment solutions. So Jeremy, perhaps you want to take it on from here.
Absolutely. And it's fascinating listening to Ronnie talk from a fintech perspective, from a banking rails perspective, talk about the redundancy that a payment service company such as APA requires in order to provide a really stable service to our SME customers who are looking for stability when they make their cross-border payments. And it's interesting because there is a correlation here between how important personalization is to that underlying client and how important digitalization is in terms of the capability mix to be able to deliver that payment solution that is required. And those two things go hand in hand. So let's take a step back and maybe let's look at a use case example. I'm going to walk you through this just to bring these two pieces together because they are really, really important when we think about what is that client experience, what's that end client experience. So here we've got a profile of an SME customer who's in their wholesale trade based in Singapore. And this customer of APA collects payments from their clients in Asia. They also have requirements to make their own cross-border payments to their own suppliers globally. And price is important. Price is always important. We hear that every single day. And one of the interesting things that we find is on the street, there's a lot of activity geared solely on price. But when we can dig a little bit deeper, we find that there are actually more need sets that can be addressed besides price. And in this case, we've got a need for real-time settlements. We've got some challenge points with the current banking provider around risk thresholds, in other words, risk tolerance levels for some of their payments that need to be made. And so those things are becoming more complex for this use case. So really, when we boil this up, what are the payment challenges? Well, first of all, we understand they need resilience when it comes to medium and high risk payments. In other words, they need some redundancy. They need different capabilities, different platform capabilities to be able to make those payments. And Remy just touched on that really eloquently just a moment ago. Cross-border transfer delays are also an impact. In other words, payments that are going through their current provider impacted by corresponding bank delays. And we see this very frequently. And is there a better way to manage the receivables and payables components of that cross-border requirement? They're unhappy with the current service. As we spoke just a moment ago, banks have a huge portfolio of SME clients, and they are quite demanding at times. And I'll touch on some research elements that we've uncovered on this point in a little bit of time. But as you can see on the right-hand side of this screen, I mentioned before, 75% of decision makers in the UK are saying in our research pool of 4,300 CFOs and CEOs, they're willing to pay more to have someone on the other end of the line who understands their business. That's going to be really important. Instant cost-effective payments that go through internal transfer solution. In other words, this is the account-to-account piece that we were touching on before. It's becoming very, very popular. Personalized relationship management, being able to build reliance on the management of your account. In other words, you move away from a transactional relationship based on price to something that's based on more than price. And that really comes with experts who understand how to create the bespoke solution. So if we want to go to the next slide, I'm going to bring these two pieces together. So we have the first instance, a payment company such as Atlantic Partners is client facing. So we're working with the underlying clients. And so our objective is to provide a very high quality personalized service. And the question that we have to answer here is, how can we provide and how can we address the core needs that this client has for that personalization? Well, we have to understand that it always starts with find the need. What does the client need? And again, we just covered off with Ronnie just a moment ago how important it is to try and, articulate that holistic value for an SME customer that's looking to find a payment solution. In our case at APA, we look at that as making payments a partnership, meaning that's our goal. Our core driver of our value proposition is actually our people. They are the best asset that we have in representing value to clients. And how do they do that? They understand what the need sets are, and they can create a simple solution that's bespoke and custom made to what this client needs. Many players on the street are looking for a cheapest price point. In our case, we're looking for efficiency, meaning that it's based on the value and the holistic value that's provided. And we can't forget about how important onboarding is. And I'll talk a little bit about why that's important in just a moment. But bringing those things together, then we move forward to how do we best serve this customer's needs? How do we address what they're really looking for using the capabilities that we have as a finance and payments provider? Well, we look at the capabilities that can be provided through our rail partners, like Freemarket. We look at the risk threshold that our partners have, and then we understand which direction we need to work with our customer and onboard them for using various capabilities. And in this case, we're onboarding this client for a virtual account with Freemarket. And this is where that correlation takes place between the personalized service and building that reliance and that partnership with the underlying client, addressing what they really do need and building their value around holistic value and not just a single transaction price point. And then the correlation moves from personal service to digital capabilities. And this is where the partnership becomes solidified between the payments company, in our case APA, and the fintech that actually faces towards banking and rail capabilities. And these two pieces combined ultimately are how we bring together partnerships, payment options, and technology capabilities into a seamless experience for the customer.
Okay, so if we just take the opportunity there, so you've mentioned the partnership between Freemarket and APA. So, do you guys have a short case study or something like that you want to walk through quickly and given a sort of overview of how it all works together?
Yeah, Alex. So this, as I said on the previous slide, so we touched on the case study. So this is how we would bring that need set together.
I think maybe just to add to that as well, there in terms of this very well illustrated by Jeremy here, that what we try to do and what's really important. You talked about efficiency and speed of settlement and that personal touch as well. And we have also found that businesses will pay a premium for those commodities. So creating an ecosystem is really important. So once we understand, APA's needs, who their clients are, what are the rail requirements, etc., who the beneficiaries, who they're paying out to, where the money is coming in from, etc., it's really important that we start to create this ecosystem. So what we're doing on the single unified platform is effectively intercompany transfers as well. So it's very efficient, it's very fast. And I think, that's really important as a use case. What, I should be looking to adopt is trying to build your ecosystem into your fintech partner and getting them to facilitate that, to make sure that you've got assurances in terms of, where the money's going, when it's left, and fast that's coming, getting paid as well. So I think that's a key element as well.
Okay, super.
So this is also where, one more point, Alex. This is also where the partnership exists between between the payments company and the fintech, between that client-facing aspect and that banking and rail-facing aspect of that client journey. It's so important that these two elements are on the same page. They're digitally connected, and that they are working very, very close, very close together, especially from a compliance and a risk perspective. Because the only way we can manage a good client experience is by working very, very close as a partnership and as a team. So I think that piece becomes very, very prominent here.
Okay, thanks, Jeremy. And I think so at this point we'll just start to move into the industry insights and solutions. And I think we've touched on most of the questions that I have here, but maybe just a chance to elaborate on them slightly. So, Roddy, from your perspective, being the fintech in this instance, how do you see your company's innovations contributing to streamlining and reducing the cost of cross-border payments for the SMEs?
Yeah. Well, I think, using that word again that we've mentioned a couple of times here, resilience, creating that continuity of service and that peace of mind, that's really important for an SME. And, what quite often happens is that they'll look at multiple providers in order to deliver that. However, the downside of that means that that SME may well be having to spin many plates, multiple contracts, multiple integrations, multiple platforms in order to use to move money, multiple relationships, making it very complex. Certainly reconciliation would be complex. So that all means that, an SME potentially, if they went to do that, build resilience, which is really important. And I would absolutely, agree that should be a focus. But on the other hand, you need to be thinking about what operational resources and tech time is being tied up managing all of that back end, when really they should be focusing time on the client focused front end, that front end product development element as well. So, in terms of our responsibility in the fintech, it's really important that we're innovating. We talked about payment orchestration platforms or aggregators, so whereby a number of those services and products can be accessed by that single API, single contract is important. So that's really key. Reducing the cost is important, absolutely. An SME on its own is less likely to be able to command particularly low costs, low fees, etc. With a bank that's just simple economies of scale, but actually going through an aggregator where that fintech is able to utilize the combined sum of that flow of funds from various SMEs on their portfolio is going to be able to secure those better rates and fees. So, going through an aggregator or payment orchestration platform with multiple SMEs in there is going to create that economy of scale and be able to allow, which they should, pass on that reduced fee and create a bit more of a level playing field in there. So I think, just in summary, quickly, I'm conscious of time as well, Alex, by the way. So fintechs by nature are just simply more agile than the big banks. So along with the lower fees, along with the real-time transaction and that flexibility, it means that they can quickly deliver the digitalization, that modernization, improved market access, and deliver faster payments, faster onboarding, and get that SME trading quickly.
Great, thanks, Ronnie. I think we've concentrated a lot on the solutions for the SMEs, which is absolutely appropriate. And I'm kind of interested, again, from your perspective, when from the perspective of being a fintech, right? Because you guys are at the forefront of looking what's coming down the line, making sure that you are aligned with that so that you get the best products and services for your clients. So, are there any key trends that are coming down the line or that you're actively working on now that eventually will help your clients take advantage of what you're doing? Any insights there?
Yes. I'm smiling a little bit because we get asked this question every year around about this time of the year, don't we? And I'm not sure we get it right every single time as well. And actually, we probably repeat maybe some of the stuff that doesn't happen as quickly as you might expect. But, look, payment processing is becoming more, not less complex. I think that's partly due to the range of options. Jeremy talked about all of those different payment options that are available as well, but also down to the advancement of technology as well, and regulation as well around that. So I think, what's clear is that no business, free market the same, APA are exactly the same. No business can stand still. We've got to continue adding services and features, but they've got to be the right ones to help meet the needs of their clients. Collaboration between the traditional financial institutes, banks, fintech, startups is driving the industry forward. So there is a fostering of that culture of innovation. So that's really, really positive. I think on a more general level, we touched upon it as well. Digital technologies are continuing to drive financial service industries towards convenience and accessibility. And if I'm thinking personally, as a consumer, from my perspective, online banking, mobile banking, digital banking, personalized offering, that intuitive user interface, etc. All of those things are becoming common standard practices as well, moving to that cashless payment society. If I think about, and I will come to answer the question in a second, I think about the B2B space, and remember that number, 26,000 that's entered the market in the last 5 years. Those fintechs, neobanks are challenging. They are disrupting the traditional financial services. So it's important that collectively you've got to adapt or fall behind. I think the key trend, though, I can't remember who it was, talked about stable coins. Absolutely. The adoption of cryptocurrency and cross-border digital payments, which includes stablecoins and CBDCs as well as central bank digital currencies, is probably one of the key trends. So you look at major companies like Microsoft, Tesla, Expedia, WeWork, they're all now accepting cryptocurrency as payment methods for them. So I think, the use of cryptocurrency in cross-border is going to mean faster transaction processing. You're able to automatically convert to local fiat, to local currency, etc. So, and there's a number of different players that are doing that. Use of blockchain, that's also going to reduce costs, settlement times as well. So embracing all of these digital payments in terms of leveraging these emerging technologies and collaborating with fintechs, these are going to be really key strategies coming into the next year for business to be able to thrive in the industry, which is changing. I think maybe if I talk about those cryptocurrency stablecoins and CBDCs in a little bit more detail. So, Bitcoin, Ethereum, maybe not in the last 12 months, that's probably fair to say, but, generally speaking, they are pretty volatile. So I think CBDCs, but probably actually maybe more likely stable coins, will be the currency of choice in terms of where we go into the digital world. So, CBDCs, they maintain that, central control structure with the central bank overseeing their issuance, their regulation, the redemption, etc. So it probably means that the big banks, that the correspondent banks, are going to be more likely to accept or maybe adopt that means of payment rail. It's going to be seen as safer. But I think in terms of where I would pin my expectations around growth, I think the better bridged between the traditional banks and the digital assets ecosystems going to be stable coins. So unlike CBDCs, who are governed by regulated by the central bank of a country, stable coins are governed by private entities. And my belief, therefore, because of that, they're therefore more likely to be agile for development. So that's really key. And look, I think it would be remiss of me, I think, to not talk about the adoption of artificial intelligence. We talk about it each year. We'll roll it back out for 2024. But, the machine learning and payment processing, that's really starting to revolutionize fraud detection, fraud prevention, in order to deliver real-time transaction monitoring and efficiency. So I think AI increasingly is going to be an important trend in that respect. So, maybe just to summarize all of that, AI, stable coins, maybe to a lesser degree, CBDCs, all around speed, cost, and convenience. That's going to be foundational to the SMEs experience, and it's going to be, those demands that are going to drive the trends, I think.
Okay, thanks, Ronnie. Jeremy, anything to add specifically maybe on I know you did bring up the cryptocurrency stuff earlier on, so anything to add on that or the AI stuff?
Yeah, look, I think it's natural. It's natural heading, especially in the AI piece. We're seeing that become a lot more adopted right across the industry right now. And, even from a service perspective, AI tools and capabilities are now actually bridging a lot of those gaps that we've talked about from a personalization perspective. So, no, I no more to add on that piece, but just to echo the sentiment, I couldn't agree more wholeheartedly. Stable coins are what I can see in the future. Certainly the central bank issued variants would be the same. And AI, I think we're going to see a lot more of these pieces going forward in payments.
Okay, great. Thanks, Jeremy. Okay, so we are in the final few minutes. Now, Ronnie, I know that I've just got two more questions for those in the audience. So I think, we have touched on high interest rates and growing e-commerce. So perhaps I'll just pop this one out there and you can kind of raise anything that you might see as slightly different. But I think it's about strategies here. We did earlier on, but how can how can people partner with you? What strategies do you guys use to adopt and survive, especially in this high interest rate world that we live in? But we know that there's growing e-commerce and there's this evolving payments landscape. So there's like threat and opportunity. What do you see?
Yeah. Well, I think, Alex, maybe 4 or 5 in there in terms of what are the key strategies, the areas to focus on. So use of smart technology to address those areas of concern, that's really key. So automating, industrializing your processes. So using that technology, using the data to create early warning signs, identifying trends and also creating opportunity signposts. So making sure that technology is in use, that's giving you that guidance as well. I think the second one might be, balance the value proposition. Making sure that you're creating a win-win between suppliers, partners, clients. It doesn't last particularly long if somebody loses out in a relationship. You all want to be winning in that. So building those balanced value propositions, I think, is important. Another key strategy, we touched upon it earlier, but it's very relevant. I'll mention it again, finding the right partner, in order to build that value proposition. So businesses, they used to try and build in-house. I think the market's moving far too quickly for that to happen. So look at partners, look at finding the right partners that's going to help you grow, to allow you to spend more time on the front end managing your own customers. Key thing, obvious maybe, but it's worth mentioning, have a clear strategy. Have a set of clear goals, clear milestones, in order to ensure that you are on the right path, making sure you're getting there, and then be able to measure your progress. I think it would be remiss of me on any webinar not to mention OKRs. I'm really passionate about that as well. So if you want to do a webinar just on OKRs, I'm happy to participate on that one as well. And then finally, I think, in terms of the key strategy is, build the partnerships to create an all-in-one and an end-to-end solution. We talked about aggregators, we talked about POPs. Make sure that you're building that partnership as well, and make that client relationship that you've got sticky. So if you've got that end-to-end process, you've got a much stickier relationship. Don't give them reason to look elsewhere. Frankly, the cost of retention is almost always much lower than the cost of acquisition.
Yeah. Brilliant. My final query for you, Jeremy, then is, look, we looked at some of those key trends. I'm kind of interested about potential new and upcoming trade flows? Do you see those as developing around e-commerce or live streaming? And then perhaps as a slight segue away from that, examples of new and emerging B2B payment use cases that you can see coming down the line in the near future.
Yeah. But I think Ronnie mentioned something pretty important here, which is partnership. It costs a lot more to build than it does to partner these days. And it appears that there's a white label for almost every business function now, be it product, service, or otherwise. And so it opens up a new doorway of opportunity for SMEs as they're growing. And what that essentially comes down to is more or less a B2B subscription economy that's developing on scale across every facet of the business. So if I think about our own business as an SME, for example, I'm thinking about, the CRM, the accounting platform, the HR platform. I'm thinking about data storage. I'm thinking about cloud storage. Right. So this aspect of, be it product, services, trade, etc., but ultimately coming back to a subscription model, we're seeing a lot more of that on a lot grander scale. And SMEs are primed to take advantage of, not having to build from scratch and can partnering in the right areas of their business. And ultimately that opens up new payment opportunities. Trade is coming back on. Trade over COVID, during the COVID pandemic, we saw a reliance change in the supply chain mix. In other words, don't have all of your eggs in one basket. And now, combined with the exit from COVID and the geopolitical, configuration around China, around Russia, around Europe, Ukraine, now Israel and the Middle East, right? All of those things bring into question redundancy through supply chain, meaning don't have all of your suppliers in one market, in one place. And we've seen that now in the SME space. And so what that means is there's a lot more cross-border volume going a lot more different directions when we think about capital goods purchase and trade goods. And then finally, I think e-commerce and mobile platforms, we talked about that at the beginning, but those are just continuing to grow and grow and grow. And as I mentioned earlier, the evolution away from or through the consumer business into a B2B application, we're seeing a lot of that become a lot more prevalent. I think we will continue to see that part of cross-border payments and particularly B2B trade flows expand going forward.
Super, guys. Listen, we've hit that time where we've, I think, gone through all of the points. There's been a huge amount of information here, a lot of insight, and I really appreciate both of you spending the hour or so with me. So it would appear that the audience have been listening in, but we've been so explicit that they have no questions. So at this point, I'd like to thank Ronnie. I'd like to thank Jeremy. As I said, huge amount of information, lots of insights. For those of you that wish to, this will be shared later on. You can listen to it again, or you can share it with your colleagues. So, gentlemen, thank you very much for your time, and have a good rest of the day and evening.
You're welcome. Thank you.